Hello everyone, my name is Faizan Ahmed and I welcome you to another edition of HBL Market Insight. A lot has happened both locally as well as internationally since we last discussed the monetary policy. We have seen local inflation moderating to 12.2% in Feb as compared to 13% in January. Trade deficit has also shown considerable signs of improvement on a month-on-month basis. All of this transpired into State Bank of Pakistan's decision of maintaining the policy rate at 9.75%. While SBP has cited local macroeconomic improvements as the primary reason behind its decision, it has also acknowledged that the intensifying Russia-Ukraine conflict has added a high degree of uncertainty in the outlook for international commodity prices. SBP seems cognizant of its possible implications on Pakistan's external account position and has indicated that it stands ready to intervene as and when necessary. As it is, SBP has reiterated that the current level of real interest rates on a forward-looking basis are appropriate to guide the inflation to its medium-term target, support growth, and maintain external account stability. To discuss the broader scheme of things, I have with me Risha Muhyiddin, who is the Global Treasurer at HBL. So Risha, what are your thoughts on the matter?
Thanks, Faizan. This decision to keep rates on hold was in some ways telegraphed from the previous meeting where the State Bank announced a fairly dovish outlook in their forward guidance and in the analyst briefing following the announcement. Now, what's really interesting is that we have a couple of takeaways from this. Firstly, the fact that inflation at 13% in January and 12.3% in February has not really phased the State Bank. They see inflation coming down gradually, and in fact, they see the measures that have been taking place is already having an effect in dampening demand, and hence will lead to lower inflation going forward. They pointed to lower auto sales, cement sales, and petrol sales, in fact, which have gone down in volume, as indicators that the policy is working. Secondly, they pointed very much to the fact that fiscal policy has remained prudent over the past couple of years. And they pointed to the fact that Pakistan's debt to GDP has actually come down, and in fact was much lower than the IMF had projected a couple of years ago, and even before the COVID situation hit. So in many ways, a loose monetary policy complements a tight fiscal policy, and it's probably the appropriate mix for the country going forward. If you have a tight fiscal policy and a tight monetary policy, that would obviously choke off demand very sharply and perhaps lead to a recession going forward. Secondly, another interesting point was that they mentioned that the PM package, which was announced a few weeks ago, where the government would freeze electricity and fuel prices, that would actually lead to two things. One is that it led to lower inflation expectations and led to a higher consumer confidence. And finally, the fact that this was not going to be adding to the deficit, it would be deficit neutral. So in a way, it's a win-win on all counts. And this has actually helped in their decision-making going forward. Now, one area of concern that they did mention was that the Ukraine crisis is a very fluid situation, and this might warrant some action going forward. Now, the Ukraine action, obviously, in terms of Pakistan's role or the effect on Pakistan, is that commodity prices have already gone sharply up, and therefore this would lead to imported inflation. Oil prices, as most people are aware, touched 139 on Monday, and now trading around $125 a barrel as we speak on Tuesday. So this is obviously a sea change from the previous week when oil is trading in the $100 to $110 range. In fact, wheat prices have gone up even more than oil, gone up around 60% since the weekend. Now, I'd just like to mention what happened over the weekend was that the Western and OECD countries were considering a ban on Russian oil. Until now, oil and gas was not subject to bans. Now, this has a critical implication for Western Europe, because Western Europe imports 40 to 45% of their gas. And so it's highly unlikely that the EU and European nations impose a ban on Russian gas. So it looks like this will have partial support across the globe. But in any case, it's already led to a sharpening of oil prices and gas prices going forward. Now, one thing I should add is that oil prices were already looking higher. They were trading around $90 before the Russian military action in the Ukraine, and supplies were already tight, and the supply-demand situation was already looking very uncomfortable, especially as an oil importer in Pakistan. So that's one thing that the state bank is very aware of. Although they did say that oil prices tend to be very volatile, and in fact, the governor pointed to the fact that oil prices went negative for one day, admittedly, during the COVID crisis. But it just shows that oil prices can be very volatile, and so it's very difficult to predict these. However, the state bank did leave the door open to a potential change in the policy rate, which in this case probably means a hike, potentially. And in fact, they mentioned that they might meet outside the normal MPC times. The next MPC meeting is scheduled for mid-April, and they pointed to the fact that they don't have to wait till the next MPC. So that might lead to some hawks believing that there might be a hike on the cards. We don't think that's necessarily the case, that they'll hike. The state bank looks very confident that the measures they put in place will slowly dampen inflation down below the 10% level and gradually over the medium term to the 5 to 7% level. So I'll leave you with that, and thank you very much for tuning in, and we'll see you later.